Now let's discuss your resource needs for your operation. Traditional resource management plans address land, labor and capital. Here you will identify needs in all of these areas, but limit your strategy development to land, buildings, breeding livestock, equipment and variable inputs or supplies. Labor-related strategies are discussed separately in the Human Resources Strategy section, and remember, I recommend when you write this section you make it an annex to your plan. Take stock of your operation's future resource needs for each enterprise and ultimately, the whole farm. Think about how much land you will need, what type of equipment you will use, and any other physical inputs necessary to produce your product. The choices that you make regarding resource use, acquisition and ownership can have a big impact on the overall profitability of your business. The costs of owning and operating farm machinery, for example, may account for 20 to 30% of the annual per acre production costs for crops such as corn and soybeans. If you are new to the business or industry and uncertain about resource requirements, try talking with experienced producers or your local extension educator to begin brainstorming a realistic list of land, livestock, machinery, equipment, labor and other input needs. If you plan to produce a specialty commodity or use an alternative management system, accurate production input records may not be readily available. In this case, your research may take you to the internet or some of the alternative experiment stations located at universities across the country. Your regional SARE office may be able to help you locate information sources in your area. Get a paper and pencil and describe potential crop production systems and potential livestock production systems. Record future resource needs for crop and livestock enterprises, respectively. Think about how your operating schedule and corresponding resource needs may change if you transition into a new management system over a period of seasons or years. Another critical component of your operations strategy involves your plan for filling resource gaps. Return to your crop and livestock production notes from Planning Task 2 in which you described current crop and livestock input needs and equipment use. Compare these lists to those that you completed for future operations. Are there any gaps? Or perhaps you now have underutilized resources. Consider some of your strategy alternatives for filling or eliminating gaps between current land, building, machinery and equipment availability and future physical resource needs. Will you make better use of existing machinery and equipment? Acquire additional, new or used, resources? Gain access to additional resources through business arrangements, formal and informal. Making changes in your current resource use may mean making better use of underutilized resources. Based on your evaluation of current resource availability and future needs, are there any resources that are underutilized or that will become underutilized as you move toward your future vision? If so, one of your resource management strategies might be to make better use of underutilized resources. How you define better will depend on your values and goals. For example, it may mean sharing or renting out equipment with another family member or neighbor. If the gap between current resource availability and future resource needs is significant, you may need to look at acquiring additional physical resources. This can be a financially risky alternative. You will need to carefully evaluate cash flow in the upcoming financial classes before implementing your plans. For now, however, consider the following acquisition options if you think additional capital will be needed to meet future operating needs. Land and buildings can be purchased, rented or leased. Each of these acquisition options has financial advantages and disadvantages, which will be discussed further later, when you address finance strategies. For now, though, you should realize that land acquisition options should be weighed carefully. Land purchase decisions can make or break your business. They often require a large amount of capital and a long-term commitment. Purchasing real estate is one of the most important decisions a business may make. It is important not to let emotion overrule sound business judgment. Consider both what the land is worth to the business and what you can pay for the land and still have cash flow. If purchasing land is a part of your operations strategy, you'll evaluate the feasibility of that strategy carefully in the financial classes. You'll need to discuss cash flow, tax and equity implications with an accountant. If additional machinery and equipment will be needed, either to replace old equipment or to meet new resource requirements, you have several acquisition options, such as purchasing, renting, leasing, custom hiring, or exchanging labor for access to equipment. If you plan to purchase additional equipment, you should also consider the advantages of buying new versus used equipment. Think about your ability or willingness to perform equipment repairs and to finance large capital purchases. As you brainstorm machinery and equipment acquisition options, it's a good idea to talk with other farmers, equipment dealers and competitors about their experiences. Look at the status of current buildings and equipment to realistically determine what can be used. Ask yourself whether there will be any overlapping demand for building space, equipment and machinery, or whether replacements may be needed. Begin brainstorming resource acquisition options. Be creative as you think about how to fill your machinery and equipment needs. Look for opportunities to meet your land, labor and equipment needs through strategic alliances, formal partnerships, or crop-sharing arrangements. Saving money on unnecessary purchases can increase your profit margin. Carefully evaluate the benefits of any purchase you make to support your production needs. Your goals for growing or contracting the business, as well as upper and lower limits on size, will affect your choice of business organization and your operations schedule. Farm size refers to the amount of land in production, number of acres, the number of animals you raise, and the value of gross income from the business. Someone who is planning to convert from a traditional cattle finishing operation to planned grazing, for instance, may be limited in size during the transition period while pastures are developed and management techniques fine-tuned. How will you size the business and plan for any growth? Begin your research with a little number crunching to determine realistic production estimates for each future enterprise and production schedule. Use information about the future carrying capacity of your land, the processing capacity of your equipment, boarding capacity of your bed and breakfast, or harvesting capacity of your family and staff to develop output projections. Think through any legal or regulatory agreements or policies that will affect the use and management of physical resources under your new operations strategies. Historical information about yield performance and productivity are available for traditional enterprises from a number of resources. Check with your local extension office or your state Department of Agriculture. Alternative production system information might be a little harder to find, but your local extension office or state Department of Agriculture should be able to give you some ideas of who to contact in your area if they don't have that information. Check also with sustainable agriculture organizations in your area or your regional SARE office. One of your most useful resources may be other farmers, those who are on the cutting edge, using a new production system or technology. As you develop output and production estimates, particularly for alternative enterprises with little recorded performance history, you may want to estimate best and worst case production scenarios, or high and low output projections. Sit down and record production and output potential and begin shaping a size-related strategy for the business. If appropriate, describe your growth or contraction strategy for the whole farm and for each future enterprise. Once you have captured on paper all this data and capabilities, you're ready to develop a whole farm operations plan. Write an operations strategy summary to briefly describe the management system you intend to implement for each enterprise. Detail crop rotations, pasture layout and rotation, milking schedules, etc. Think about how these might change throughout your startup or transition period. Next, list new resource needs and your strategy for acquiring them. Then record all operating expenses associated with each enterprise or the whole farm, if appropriate. Finally, you're ready to pull your enterprise-specific operations strategies together into one whole farm production and operations strategy. As you draft a whole farm operations summary, be sure to include supporting research and note the strengths, weaknesses, opportunities and threats, SWOT, associated with each strategy alternative. It's also a good idea to have each planning team member summarize a whole farm operations strategy and work through a SWOT analysis on their own. Then you can compare notes and brainstorm about internal and external threats, and make sure everyone agrees on which overall operations plan you will pursue.
Our next class will look at human resource strategy. This will be the human resources necessary to execute your operational plans, and all the factors that go into your human resource strategy. So we look forward to that, and thank you for joining me today.